Joining our closing bell exchange now, Shannon Saccocia from Boston Private Wealth, Keith Bliss from Drive Wealth, and our own Rick Santelli. Keith, here on set with us. I'll start with you. I mean, as we said at the top, 8 straight days, down days for the Dow, down more than 2% week to date. Is this starting to get a bit concerning? We've been saying trade wars aren't weighing on the markets. Are they now?
Well, I think it's certainly a reaction from investors and traders on these multinational companies, which of course are the main components in the Dow. They are getting a little concerned and they're taking some money off the table. I mean, we got above 25,000 again. So it's probably a right move to do, and you're seeing rotation into the smaller cap names that do most of their business here in the U.S. I'm not really all that concerned yet. We still don't see the Dow as being oversold. It's been a drip, drip, drip coming down. I think next week will be instructive as we get into the end of the quarter, and then we set ourselves up for what's going to happen in the third quarter and start getting earnings reads. I'm not really all that concerned right now, and I think the other point is that investors and traders have looked at what the strategy and the tactics have been of the Trump administration, where they basically throw a grenade in the middle of the negotiating table. They wait for everybody to scatter, wait for the weekends to clear out, and then they come back.
Right.
And then things get back to normal. We've seen this over and over again, and I think that's the way the market is really reading this.
Yeah, that's why the stuff about the tariffs in the EU on cars and whether that all comes down now, that would be a major breakthrough. So we'll see. But Shannon, what do you think about the market here? And are there places that you in particular like to be right now?
I think the point is well taken about the Dow. I think that there's some moves by investors right now to insulate themselves from some of the activity that we'll probably see as it relates to trade over the course of the summer. And so where we see opportunities are areas that aren't as affected. So we still like technology in this space. We like certain opportunities in healthcare. We're looking at financials. Tough environment for the yield curve right now, but if you look at valuations and you look at the opportunities in that sector, there's certainly places that we want to be.
I'm taking them off.
I just think. Overall, I mean, I still think there are quality companies in the financials. I think if you look at some of the larger banks, such as JP Morgan, great fee revenue, not as exposed to kind of the yield curve overall. I think that there's opportunities there. And I think that, the Dow moving down, that's more of a headline over the last 8 days or so. I think if you look at what's been happening with tariffs, it's not surprising. But I think if you look at the S&P 500, the sectors that have done well, investors still continue to find solace in growth and momentum, and I think that's going to continue through the summer.
Rick, Philly Fed survey came in a little bit, Philly Fed manufacturing came in a bit weak. Surprised how much it's moved the U.S. dollar?
I was a little bit surprised, but it was the softest number since November of 2016. Wolf, you'd be surprised. Traders, for whatever reason, have always really paid close attention to that number. But then again, there's another way to look at this. Now, it's impossible for any of us to truly say what is affecting the equities in general or the Dow specifically. When I look at other sectors, the question becomes more difficult. The dollar index is down a bit today, but at 94 3/4, it's pretty much where it settled last Friday. We have now dripped down to just under 290 in 10-year notes. The same place basically we settled on Tuesday, which was just a whisker under 290. We settled at 292 last Friday. So by looking at the dollar index or by looking at interest rates in the U.S., it's hard to gain any knowledge of nervousness on investors' part, which is the problem. Many of the signals we used to get from those markets have been distorted. Think about how Mario Draghi affected the markets last week, how Carney to some extent affected it leading into the MPC announcement today, and how it responded afterwards. It gets more and more difficult. One thing I think is for sure, there's a slowdown going on that affects the U.S. less than the rest of Europe. And in that environment, the questions of trade seem to be magnified a bit. But I think anything that diminishes the uncertainty of that issue, and I think there will be events that will do that, I think the snapback could be rather fast.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.